Hello traders, you are welcome to this video on Elliott Wave Truncation. Whether you are a novice or an experienced trader, understanding truncation can give you a significant edge in analyzing market trends and avoiding potentially disastrous trades. Okay, so what is Elliott Wave Truncation? To start, let us break down Elliott Wave Truncation. In a typical Elliott Wave pattern, yeah, in a typical Elliott wave pattern, you have five waves: wave 1, wave 2, wave 3, wave 4, wave 5. The fifth wave is generally the final wave that completes the cycle and often extends further in the direction of the trend. But what happens when that fifth wave does not behave as expected? This is where truncation comes into play. Now, Elliott wave truncation occurs when wave 5 fails to extend as it should and ends prematurely, often not even reaching the expected target level. It's as though the market loses momentum right before it reaches its peak, creating a weak finish. This incomplete wave structure signals that the market might be about to reverse, which is possibly what we have happening around here, or rather, what we had happen around here, possibly. So this wave 5, you can see where the wave 5 stopped, and shortly afterward we actually had a reversal. So it shows that the market might be about to reverse, or that the cycle is ending earlier than expected, earlier than anticipated. So why should you care about truncation? Well, a truncated wave is a red flag for traders because it usually indicates that the market is losing steam, or in some cases it could be setting up for a more significant price reversal. If you don't recognize truncation early, you might end up in trades that go against you once the trend finishes, or rather once the trend shifts. So how do you spot Elliott wave truncation? Spotting Elliott wave truncation in real time can be tricky, but with the right tools and analysis, it's certainly possible. Here are a few indicators that can help you spot truncation. Okay. Now, one is wave 5 fails to reach the expected target zone. In a healthy Elliott wave pattern, wave 5 should extend beyond the peak of wave 3. But what do we have happen here? Can you see that? So, in cases of truncation, wave 5 often falls short of this target, creating a flat or even downward price movement. So pay close attention to this. If you expect the market to push higher and it doesn't, truncation may be in play. Secondly, weak price momentum. If the market shows a significant lack of strength in wave 5, meaning price action is slow and hesitant rather than explosive, it could indicate truncation. This weaker momentum may signal that the market is running out of fuel for the current trend. Now, the third scenario is reversal at the end of wave 5. A sudden reversal in price action right at the end of wave 5 can be another telltale sign of truncation. So, if you see a sharp move against the prevailing trend, especially at the wave's conclusion, it could mean that wave 5 did not fulfill its expected extension and the trend is about to shift. So, why do traders miss truncation? A common mistake many traders make is expecting wave 5 to behave exactly like the other waves. Since truncation is less common and more subtle, traders often overlook it when it occurs, but it is crucial to understand that truncation is a part of the market's complexity and it doesn't always follow the textbook rules. Another reason truncation is easily missed is because traders rely too heavily on price targets and Fibonacci levels. So while these tools are essential for technical analysis, they can give misleading signals when truncation happens. Okay, a truncated wave is a deviation from the expected pattern. So when using these indicators, always stay flexible and be open to the possibility of a change in trend. Okay, now that you know how to spot Elliott wave truncation, how can you avoid the pitfalls associated with it? The first key is risk management. If you suspect that you are in a truncated wave situation, it is wise to place tighter stop loss orders to protect yourself from sharp reversals. Okay? Additionally, combining Elliott wave theory with other technical indicators can help confirm your analysis. For example, using volume analysis, moving averages, or oscillators can give you a clearer picture of whether a trend is likely to continue or if truncation is setting up a reversal. Remember, no single indicator should be used in isolation, okay? Always combine multiple tools for a more complete view of the market. Also, keep an eye on the broader market context. Sometimes, external factors like news events or economic reports can cause sudden shifts that lead to truncation. While Elliott wave theory is great for spotting patterns, being aware of fundamental drivers can help you adjust your analysis when needed. Okay. Lastly, do not ignore wave structure. Always analyze the shape and development of each wave. Okay. In the case of truncation, the wave structure will appear less clear and you might see irregularities that signal something is off. So to recap, Elliott wave truncation is a subtle but crucial concept that every trader should be aware of. It happens when wave 5 fails to extend as expected, signaling that the market may be losing momentum or preparing for a reversal. By recognizing the signs of truncation such as weak price movement or a sudden reversal at the end of wave 5, you can avoid being caught off guard and protect yourself from poor trades. If you want to be a successful trader, mastering Elliott wave theory, including truncation, is a must. Remember to use other technical indicators alongside Elliott waves and always stay vigilant about market changes. If you found this video helpful, make sure you hit that like button, subscribe to the channel, and ring the notification bell so you never miss a new video. And as always, keep refining your trading skills and stay prepared for whatever the market throws your way. Stay tuned for more tangible videos. Happy trading.